right, good afternoon, traders. We are back at it again. I'm going to go over a rundown of my trades today and why I took them. So first, what I did is I started and I took a look at the dollar index, and just looking at the daily here. These highs look just a little too clean, so I kind of expected us to come up and grab that. If you look on the 1 hour, it's a little bit easier to see. You can see them right here. And at 6 and 7 a.m. we're trading down here. So my expectation was to sweep this, sweep these lows right here, and then run up and take that liquidity. So transitioning over to the Nasdaq, same thing. On the daily, right? We're up into a new week opening gap. We are in a daily fair value gap, and my expectation is that we pushed up to take the highs, the previous daily high, which is right here on this candle, up to this daily fair value gap up here, and then reject down and take out previous daily low. And I actually have a recording, or not, just a snippet of that here, so you can see I did for dollar indexed at 7:08 a.m. ES, and then for Nasdaq. So again, here for Nasdaq, we'll just open this up in the browser. You can see, this is where on the 15-minute we were trading right here, and this is what my expectations were. Right, come up here, take out this liquidity, come down, find a fair value gap, and sell off down to this liquidity, and then potentially down to the previous daily low. So that's what I was expecting. And looking at the hourly, right, it just this is rigid here, right, and then all this right here, all of these is just, all this is going to be low resistance liquidity, all those lows right there. All right, so we've got all that low resistance liquidity. We got the previous daily low right here. Here's true open, 7 a.m. So then you drop down to a 15-minute, and right here is when I was kind of mapping out what I expected it to do. So what did it do? CPI at 8:30, ran up, took out these highs, okay, and then came down. So then it came, I had retested. What I did is I marked out, if you watch my recording, here is a breaker right here. So I marked out this breaker, and I marked out the 15-minute fair value gap. Actually, I think I went down to a 5-minute, but there was a 15-minute order block right here. Right, so I marked that out, and then I dropped down to a 5-minute, and I marked out this 5-minute fair value gap right here. Right, so that's what I was looking for, and I took a trade here at the test of the it was like right in the middle of the fair value gap, and came down and basically it stopped me out because it went up to run back up for these highs right here, right? This is like the 820 candle. If we drop down to the 1 minute, that's probably 820 high. So it came back up to retake that. So then once we got some displacement down, you can see I entered again on this, and then I entered again here, and I scaled out, and then I re-entered here on the retest of this. We have another 5-minute fair value gap, right here. So I re-entered again there in that 5-minute fair value gap retest, sold off at the bottom of this candle for these lows. And then I actually re-entered again. If you drop down to a 1 minute, you can see that we broke those lows, and I just had a hard feeling that we were going to come down to the previous daily low. So what I decided to do is to re-enter and take a quick scalp just down here. As we started retracing back up, I just moved my stop and cut the position because I was already up on the day for what I was looking for, which is 300 to 500 a day, and that is exactly what I got. So I hope that helps as far as an analysis and a breakdown of what I did from a top down into taking trades. Now, truthfully, if what I would have rather have had happen today is just truthfully be a little bit more patient, right? I already had the expectation that we were going to go down for those previous daily lows. So, what I really should have did is right here, let 9:30 open come up and take all this, right? And then after 9:30, if you drop down to a 5-minute, right? After 9:30, we have taken out those highs, we come down, we get this displacement here. So now it's like, okay, perfect. This is showing me this would be a low. If you were to go down to a 1 minute, this would be a low risk buy, or sorry, sell. You could just right here, turtle soup, sell right there, and then put your stop at this high, and then let it go, and then drop back up to a 5 minute to manage your position. Right, and then as you see it cut through here and retest, see it hold this green candle, you could even add to your position. But really, I would have liked to just hold this position here, keep the stop at the high, and let it run all the way down. Something like that would have been, let's see, just to give you an example, right? You take this turtle soup right here, stop at your high, 20, it's 26 and a quarter, and down at these lows, you do one contract, you're talking 4,300 for a $535 risk. So ridiculous gains on that one there. Hope that helps. Happy trading to you guys. Remember, trading is risk, and trade at your own risk.